Good morning and welcome to Ask the Expert, a daily series from 8:30 a.m. to 9 a.m. to help small businesses. I do hope you're all keeping well. My name is Judith Dugdale and I'm here to answer as many questions as I can this morning. Please ask any questions in the comments box below or use the hashtag QBATE on Twitter. If you need any more advice after this session, join the official Intuit Quickbooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. QuickBooks also have a dedicated COVID-19 information site. Just go to QuickBooks website, scroll down a little bit, and then click on the big Learn More button under the header, Support for you and your business during COVID-19. Today is my third Ask the Expert series. So I just wanted to do a very brief introduction about myself and my firm for those of you who haven't seen me before. And then I'll just do a bit of an update on some of the announcements that were made on Friday to the Self-Employed Income Support Scheme and to the Furlough Scheme. And then we'll get right on with answering as many questions as we can. So who am I? As I said at the start, my name is Judith Dugdale. I'm a chartered accountant and I'm based up in the northwest of England. I work for MHA Moore and Smalley and I joined them in the year 2000 after graduating from Hull University with a degree in accounting. Since working there, I graduated as a chartered accountant and then I've worked in various different offices within the Moore and Smalley family, as well as some of the different sectors that we specialise in, from hospitality and leisure to now digital solutions, which I head up. The firm is a large independent firm in the northwest of England. We cover Cumbria, Lancashire, Merseyside, Greater Manchester and the East Midlands. And we offer all the services you would expect a large independent firm to offer, such as ongoing compliance services, which is year-end account, corporate tax returns, personal tax returns, VAT return submissions. In addition to that, because we are large, we've got some support services that feed into those regular clients, which include a corporate finance team to help businesses who are looking to sell or buy or raise finance. We also have an independent financial advisors team, which help our clients with investment and pension decisions, and a specialist tax team that oversee the whole tax picture for our clients, be it corporate, personal, inheritance tax, everything mixed up together. And we have a outsourced payroll team who are incredibly busy at the moment. There's certainly none of them will be watching today. They're working ridiculous hours to try and help all our clients calculate what staff should be paying under the furlough scheme, as well as making those claims. And indeed, they've done over £3.5 million worth of claims for our clients at the moment. So it's a very busy time and it's very complicated. If there is anybody out there struggling with furlough claims, then please don't hesitate to get in touch. As you can tell, we're doing a lot of them to have claimed 3.5 million so far. I mentioned before that I specialise in digital solutions. So what that means is I head up a team of 11 people who only deal with clients that use cloud accounting software. So they tend to be, by nature, startups, micro businesses and small businesses. And they tend to be the younger size businesses, maybe 0 to 10 years old, although we do have a few businesses that are a bit older than that. They're across all sectors, and that's what's great about cloud accounting. The basis of the system, so QuickBooks Online, will do most of what most small businesses need, but then there's all the ecosystem of cloud accounting apps in the background, which enhance the QuickBooks Online work that they provide, so that then you can be more bespoke for manufacturing, or warehousing, whatever it might be that you deal with. There'll be an app that will enhance the QuickBooks Online experience for you. My team look at system reviews, look at which is the best system for you to use. We then train you on how to use that and provide support ongoing in the future. We have 2 people that head up that side, and one of those is a QuickBooks Online certified trainer. And they actually train other accountants. So they're really top-notch trainers. The other side of the digital solutions team is more of the ongoing and advisory side. So we all do your year-end accounts, management information, management accounts. We have offer a bookkeeping outsourced service, as well as doing people's VAT returns and submissions. We take that a next step further. So instead of just doing those accounts and looking historically, we then use other applications that link into QuickBooks Online to enable us to forecast into the future, which helps us do business plans as well as strategic advice. What I would like to do now is just have a quick look at the changes or the updates that were announced last Friday by the Chancellor. Not sure whether you all will have heard about the changes or seen them, but to give you a brief overview, he touched on some changes for the Self-Employed Income Support Scheme and the Furlough Scheme. So I'll look at those in order. So the Self-Employed Income Support Scheme, for those of you that are still not quite sure what that is for self-employed people who derive more than half of their income from a trade. If that's you and you've supplied a 2018-19 tax return, then you are eligible to apply for the SEIS scheme, as they call it. The claim for the current period opened in May, and you were able to go onto a portal and put through a claim of what you thought you were owed. And then that was to cover April, May and June, with the payments coming late May, early June. If you haven't had your payment yet, please don't panic. They've obviously got hundreds of thousands of claims to process at the moment. And I do know an awful lot of people have had their grant claim through. What the update is that in line a bit with the update of furlough, they've extended this period again. So we only knew about the payment for the first 3 months, which, like I said, the claim portal opened last month. They're now saying that the claim portal will open again in August for you to do another claim. So you've got to be, you have to have been eligible for the first one. And secondly, you need to still be adversely affected by COVID-19. If you didn't make a claim in the first one because actually you were still open at that point, that doesn't mean you can't make a claim in the second portal. You just have to have done the 18-19 tax return and have those income levels that I mentioned before. If you earn over £50,000 a year through self-employed, you don't qualify, and you can only have 80% of what you would normally earn on a monthly basis, up to a maximum of £2,500. And that is where it brings it in line with the furlough scheme. Need a little bit more information from the government about the exact period that's covered and the exact amount that you'll be able to claim, but keep up to date with the COVID-19 information site that QuickBooks have, and later on I'll give you some details about the COVID hub that we have at Moore and Smalley. If you go up there, they'll be up to date, and obviously you can sign up for the government updates and obviously watch their update each day. The other thing I wanted to touch on was the updates to the furlough scheme. So a few weeks ago, the Chancellor announced that it would be extended past the 30th of June and would run up to the 31st of October, but that the employers would be asked to contribute more towards the payment of furloughed staff. But we didn't know any more than that, and it's been very subjective out there what people thought. We've got people thinking that we would have to pay a lot, some people thinking half. Well, as it turns out, it's possibly better than some of us expected. The good news is, and this what we weren't expecting it so soon, from the 1st of July, you will be able to bring back to work some furloughed staff on a part-time basis. So at the moment, as soon as any of your furloughed staff do any bit of work, they are no longer furloughed, and then you have to bear that cost from that day forward. From the 1st of July, you'll be able to bring people back part-time. And from what we understand, and we do need the finer detail on this as well, what we understand is the hours they work for you, you pay. The hours that they would have worked if they weren't furloughed, the government will pay, obviously, up to a maximum of 80% like they do now. So that's a great addition, and that should really help some of those smaller businesses and hospitality and leisure sector that may be opening in a slightly different format and don't need all the staff back at once, but need some staff. That hopefully will really help them. The other change is from the 1st of August. The government will expect employers to now fund the employer's national insurance and pension payments on their wage bill. So at the moment, under part of the furlough claim, you can claim back the employer's NI and the pension payment for those furloughed staff. From the 1st of August, that will disappear and you will have to fund that yourself, albeit the government will continue to fund 80% of their furlough pay, just not the national insurance and pension. On the 1st of September, this is where they ask for a little bit more help still. So the employee will still get 80% if they're furloughed, but the government will only pay 70% of that, and the employer will be asked to pay 10. So the employer pays 10, the government pays 70, the employee gets 80. And then from the 1st of October, those percentages change again, and the employer pays 20, the government will pay 60, and the employee will get a guaranteed 80% of their income should they be furloughed. And then the Chancellor confirmed that as at the 31st of October, the furlough scheme as we now know it will end. He was questioned as to whether that would be looked at if there was a second spike in cases. And he said, as far as he was concerned, it will definitely not carry on as it is now, but he could well bring something else in that's slightly different. Right, what I'm going to do is just jump in and start taking questions, because I can see a few that have started to come through. So I have got a question from Lynn Mari from Facebook live feed. He's, or she, sorry if I've got that wrong. How do we get the holiday grant? We are struggling. So by holiday grant, I'm not entirely sure which one you mean. I'm not aware of a grant that is called the holiday grant. I do know that some councils are offering rates relief, and sometimes they're calling that a rates holiday. If it's that you're talking about, then you need to go to your local authority and ask them how you can apply. There are obviously the other grants are the Self-Employed Income Support Scheme, which is a grant that you don't pay back. And to try and qualify for that, obviously, as I mentioned before, you need to earn under £50,000 as a self-employed person. You have to have done an 1819 tax return. And then you just go into your personal tax account. If you don't have one of those, it's really easy to set up. You do that through the government gov.uk website. Set up a personal tax account, and then in there you'll be able to make a claim. And I guess some people might call that a holiday grant because you're not actually working and could feel like you're on holiday. But if there's anything else that you're referring to, please get in touch with me separately. You can email me on digitalsolutions@mooreandsmalley.co.uk. And I'll look into whatever other grant that you think you may be entitled to claim. Jackie from Twitter, direct message. Can I make my furloughed staff part-time straight away? If so, how do I sort that out in my books? I get confused with all the dates. Jackie, from what I understand, you can't do it yet. It is from the 1st of July. You didn't make that date quite clear, so I definitely wouldn't bring anybody back just yet. If you can't afford to pay them their full-time wage. The detail will come out soon. We were hoping to have had it at the end of last week, but it will come out early this week. And I'm sure everybody, including ourselves and QuickBooks, will be updating our COVID-19 hubs and sites with that information. But don't rush in and bring somebody back just yet, just because I do think it is from the 1st of July. And in terms of how you sort that out in your books, when you're paying somebody who's on furlough, it still goes down as wages in your bookkeeping software. You will then have, as a form of income, the furlough claim. And you just put that as an other income element within the bookkeeping software. And the two will, if you're paying your staff 80%, the two will cancel each other off at the moment. Once we get up to the part-time hours, as I said, what we think that means is those staff that return to work will be paid by the employer for the hours they work, and the hours they don't work, the government will top that up to make them still receive 80%. Again, all of it goes through as wages, be it the government paying it, being you paying it, because you will pay those wages every week or every month, and then you will claim back I think it's every 3 weeks you can do a furlough claim, and that comes in as other income within your bookkeeping software. So don't worry about having to split it between working wage cost and furlough wage cost. Just put them all together as wages, and that will keep it all nice and tidy for you. Another question has come through, and this is from Ricky from YouTube Live. He's wanted to know the best way to handle a deposit towards a customer invoice that has bank charges already deducted. Presently, we need to do several steps to handle this with a negative bank charge. Is there a one-step way? Okay, so this is a bit more of a technical QuickBooks Online question. Yeah, when you raise a customer invoice, you have to raise the total gross on that invoice, irrelevant of any deductions that are coming through. Now, when you're saying bank charges that have been deducted, I'm assuming you mean something a bit like cardless fees. The way that we do that and we account for it is when you're in in the banking transaction screen and you see the deposit appear from the customer. We click on Find Match, and then all the invoices that are outstanding will appear. You can type in the customer name or the customer invoice number in the search field, and then that will narrow the list of invoices that you can see. You then pop the total amount of the invoice in the box next to it, so it looks like it's paid off in full. What you will then see further down on your screen is that there's a difference, and there's a little button called Resolve Difference. If you click on Resolve Difference, another box appears at the bottom, and in there you can select the account of bank charges or cardless fees or whatever it might be. Type in a little description, so bank charges deducted from payment, and then you enter that as a negative. Click Save, and it will post the whole thing for you. So your customer is now showing as completely paid up, and the bank charges is in the bank charge expense code, and you've only done it once. So hopefully that will help speed that up a little bit better. Okay, so the next question is Ian from Twitter direct message. Hi Judith, with more and more places opening, what questions are you hearing from your clients? What they're most asking, and what are you advising? It's a great question, that, Ian. I was actually going to say a little bit more about this before, but I was keen to start answering some questions as they started to come through. Yeah, so now we know a little bit more about the furlough scheme and a little bit more about the self-employed investment income support scheme. You're able to plan a little bit better, because you know when those costs are going to start increasing for you, and approximately when they're going to start increasing for you. So doing a cash flow forecast, and it doesn't have to be anything fancy. If you're on QuickBooks Online, you can use something like Futurely to link in, or you can use a good old spreadsheet. And what I would say is you need to list out all those payments that you know are going to come out. So all those wage costs, if you've got employees. If you're VAT registered and you deferred your VAT payment that was due in April, May or June, make sure you put that payment in, because you're going to have to pay that back by March 2021. Don't forget about that. And that's something that some of our clients have already forgotten, that they've got these big VAT bills that they never paid. If you have a personal tax bill that you would normally pay in July, that's deferred, but you have to pay it in January, so make sure that payment's in there as well. And then obviously any ongoing pay-as-you-earn costs, wage costs, VAT costs, make sure all those are put into your spreadsheet. And that's almost like the things you have to pay. And then on top of that, as part of your forecasting, you then need to look at any cost of sales, anything that you have to buy in to be able to make your sell your service or your product, and pop those in. And if you have a look at QuickBooks Online, I think it was last week or maybe the week before, they launched a new cash flow tool, and that is actually got a separate space on the left-hand side of the screen. When you log in, you'll see a cash flow bit. If you click on there, it will open up a screen and it will show you your incomings and outgoings over either the last month, the last 3 months, the last 6 months, or the last 12 months. And that's a great little tool to look at. Oh yes, I forgot we always pay for that then. Things like direct debits, maybe some finance agreements that you might have. It's always important to make sure you've got those in your cash flow forecast. And then it will even predict now some of the income it thinks you might get. So have a look at that. And then you'll be left with a list of all the costs going out. And then you've got an idea of how much income you really need to generate to cover all those costs. And it might be that you look at that and you think, oh gosh, for the first few months, we're going to, while we're opening up and getting back into the swing of things, we're going to be a bit strapped for cash. And that is then when you need to then see if there's any support out there that you haven't already claimed. So maybe a bounce back loan, or if you're a bit bigger, a business interruption loan scheme. See if there's anything there that will prop you up and enable you to get through the first sort of 6 months of opening, and see you through, so that you don't have those big cash dips. Next question, we've got Hannah from Twitter direct message. She's got some staff who are on the vulnerable priority list. Some have texted her last night to tell her that they still don't want to come back when they're reopening, and she wants to know where she stands. I don't think I can keep paying them on furlough forever. And you're quite right, Hannah. As a business, you're going to struggle to keep paying for those people for forever, particularly when you have to start funding more of those costs. At the moment, obviously, you can give them 80% and the government will give you 80% back. But as those percentages start creeping up, it will get a lot tighter for you as a business. Now, I'm not a legal employment specialist at all. From what I understand, while they're on the vulnerable list and they have to shield, you are not entitled to force them to come back to work. However, I have a feeling that they could qualify for statutory sick pay, at least for a minimum of 2 weeks. I know there's a 2-week minimum where you can pay everybody on that list. That was a fairly new announcement a few weeks ago. So that's something to look at. But obviously, post 2 weeks, it could be that they need to look at a period of unpaid leave, a period of taking some of their holidays. As everybody is furloughed, they're still accruing their holidays. So as that furlough scheme is coming to an end, you could suggest to people that they can take holidays. As far as I'm aware, an employer can make people take the holidays within that year. The other thing I would say is speak to an employment law specialist. There are lots and lots of them out there. And there's some online specialists as well that will be able to help you. Because I just don't want you to fall foul of breaking any rules. As I said, at the moment, I'm pretty certain you can't force them to come back. And that would then obviously mean taking holidays, unpaid leave or redundancies, which I know we're trying to avoid. So maybe have a quick chat with an employment law specialist to see what they would recommend on those vulnerable list. Beth from Twitter says, I was eligible for the self-employment grant last time as the business was under a year old. Sorry, I wasn't eligible, I think she's saying, as the business was under a year old and I hadn't submitted a tax return. If I was to submit a tax return ASAP, would I be eligible for this grant? The business is a year old this weekend and I'm desperate for some money. I've had no income since February. Well, Beth, my understanding is, unfortunately, that if you weren't eligible for the last one, you're not eligible for this one. I believe they are still going off the tax returns that were submitted for the 18-19 tax year. If you got in your 19-20, I'm pretty certain that they still won't make you eligible for the grant. But we're still, as I said, waiting for the very finer detail. The devil is always in the detail with these things. There may well be exception for that. And I know that there's quite a few people lobbying for those self-employed people that only set the business up this time last year. And they are really struggling, and we completely understand that. And hopefully the government may put a little caveat in there that if you can get your 19-20 return done, there's a chance. But I'm afraid, as far as I'm aware, that doesn't exist at the moment. There's obviously universal credit to have a look at. That's been widely used, and I believe that they make a small upfront payment now while they wait for the rest of it to process. So please do have a look at universal credit if you've not already done so. Next question is Lola from Facebook. Hi, I'm thinking that because I'm quite new to self-employment, there isn't a lot of information to project my cash flow. How do I get around that? And yes, Lola, you're right. Because you're fairly new, there's not a lot of historical information to look at. So for you, what I would focus on is looking at any costs you know you're committed to, anything you can't get away from. So direct debits, maybe anything you've got on leases, any bank charges you know will come through. And then you will be able to see what your costs going out are. You can then look at what income you might need, and then have a look at that income that you think you might need and compare that to what you actually have been doing in the last few months, or maybe the few months before the COVID-19 situation, and see whether that amount of income that you think you're going to need to generate will be achievable based on what you've done in the past. But other than that, there's not a great deal that you can do to project that cash flow. It's very subjective. A cash flow never, ever, ever turns out exactly the way that you thought it would. There's always ups and downs, and a cash flow needs to be regularly updated for changes. So yeah, have a go and just try and project forward a little bit about what type of income you think you're going to get through. Okay, so we've got a message from Dave on Facebook Messenger. With the latest announcement from the Chancellor saying that the self-employed can make a claim in August to cover 70% of their average monthly trading profits, will they take the 70% of the figures they already have from the previous 3 tax years? Yes, Dave. My understanding is they will do what they did in the last claim. They will look at your average 3-year earnings, look at what that will be over a monthly basis, and instead of giving you the 80% that they did last time, they're giving you the 70%. So yes, it's based on the previous 3 tax returns. As I mentioned before, I think it was to Beth, I don't think they're going to look at 1920 tax returns. I think it's the 1819 and then the 2 years prior to that. Question from Oliver on Twitter direct message. If I sign up with your accountancy, do I get assigned one person, or do I get a bit of time with a team? Do people leave practices often to set up on their own, or do they stay for a long time? Great question, Oliver. Every firm is completely different. Our firm, the way we work is every client has a partner or director assigned to them, and they oversee all the services at sort of a higher level, making sure that you're getting every service that you ask for, making sure that the delivery is timely, and being there to answer the more strategic questions. We also assign everybody a manager, and that manager is usually a newly qualified or been qualified for sort of like 2 to 10 years. And they cover the day-to-day stuff. They're there for you to ring every day with your little queries and pass things down to the wider team to do the sort of accounts prep, VAT return stuff. So we do have a team of people. We try and push down work to the appropriate level, but you are assigned a manager and you are assigned a director. In terms of people leaving, it's a difficult one to answer, actually. Moore and Smalley is probably slightly different. We have quite a low employee turnover because we're quite a large company and we have lots of areas that people can move into. Anybody that may be getting a bit bored of what they're doing because they've done it for so long has the opportunity to work in a different area. We're part of the MHA Association, which is a number of firms similar sort of size to ourselves, dotted around the whole of the UK. So we actually have had people move from Moore and Smalley down to, say, McIntyre Hudson in London, or Lock and Gowan in the East Midlands, and because it's part of the same sort of wider family, albeit we're also independent, we can offer opportunities to people that way. Some people do leave and set up by themselves. I know of one person in my wider team of 40 odd people that has left to set up by themselves in the last 10 years. So it's not happened a lot to us. But in the new accountancy age, where it's a lot of cloud accounting and it's online, it is easier for people to decide to set up by themselves. The accountancy firms are becoming a lot more agile, and sometimes the larger ones or the ones with older employees struggle to be as agile. So you get lots of new, smaller firms for accountants popping up everywhere. Luckily for us, because we've made our cloud accounting team a separate team, we're almost like an agile small business now, as opposed to it just being a huge, large firm. Now, there are a couple of questions that have come through, but unfortunately, we're not going to have time to answer all of those. So, if any of those people want to send those questions through to me separately, my email address is digitalsolutions@mooreandsmalley.co.uk. So, I'd be happy to try and answer them separately. Thanks very much for all your questions that have come through today. If, like I said, you've got any more questions, send them through to me. You can also get in touch with the QuickBooks support team. There is obviously more advice on the official Intuit Quickbooks SMB community group on Facebook. There's lots of accountants and business advisors there 24/7. Just quickly like to direct you to our COVID-19 hub that's on our firm's website. So that is www.moreandsmalley.co.uk. We update that every time there's any change or any announcement, and there's lots and lots of information on there, including quite a lot of information about doing a cash flow forecast and projections. So please log on to there and have a look. Coming up on Ask the Expert tomorrow is Andrew Block, the founder of Frank PR. So thanks very much and stay safe, everyone.